Good morning, everyone, and welcome to the Quantum Leap Futures Leap session for Thursday, November the 29th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro, micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypothesis for the day. Hypotheses. Our hypotheses are our trade plans. We do create multiple trade plans. We do not try to predict what the market's going to do. Therefore, we have multiple scenarios or plans in place. We wait for the market to open up, and then we execute the plan that best suits the market. And as the context changes, we change and alter our plan to what the market is doing. And something that was evidently clear yesterday when we transitioned to Hypo 3 and that huge spike up. So please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So yesterday, our main hypothesis was an open auction out of range, a move down into the 89 to 86 level, find buyers, and rotate us up through and back up towards the 27, 22 area. I'm sorry, up into the 2700s, and then basically going sideways. We transitioned into Hypo 3, which was a move up back into this 2750 area, and we certainly got that. And then they went way beyond what we usually would expect. And that's one of the reasons why I always watch the daily ATR up. I mean, and we talked about that yesterday, that we have to, we have to recognize that the market could move without expanding the average true range up to that 2730, which was the ATR upside target. And then we ended up closing at the highs. Very large range, very thin area. This is going to be an interesting area. This 35 area as well. We can get back above. This is a week high. I believe we have a week low too, but right now we've got a lot of news coming up, and likely to see this balance today, and then possibly make a continuation move with the minutes that are coming out later today. So let's take a look at the news. We did have jobless claims, came out worse than anticipated, but the rest was really not that bad. Personal spending was a beat. Current account in Canada was a beat. 10 o'clock, we've got the pending home sales. 10:30, natural gas. We've got Dallas Fed PC at some point in time, but the big one is going to be here at 2 o'clock when Evans is speaking, and the FOMC meeting minutes come out, and basically they're going to confirm the dovishness of Powell's speech yesterday. So each day we start with a macro to micro view. Start on a monthly. And we use a 9 EMA, 20 SMA. What we're looking at is how strong is the trend in each time frame, working from the month down. Is the trend strong with good slope and separation of the moving averages and price paralleling the 9? Is the trend being challenged with a move against the 9, or is it being broken with a move through the 9 and the 20? Beautiful upward trend at 14 months of one time framing up. Then in February, they violate the one time framing. We try to break below the 9, but they fail. And then we get the continuation more slopes separation. Then October, we have this big down month, and we almost break below the 9 and the 20, but they pop back up. And so far in November, okay, the bears and the bulls are fighting it out, and we're in between the 9 and the 20, and no one seems to get any traction. Going to the weekly, well, our weekly, hasn't really changed much. We came right back up and tested the 9 EMA again. Watch this 50 level. We keep rejecting the 9 on the weekly. We do have slope and separation. We're losing a little bit of slope, but we still have separation. But the key is we're failing to get back above the 9 EMA on the weekly, but the trend is down on the weekly. On the daily, well, we had this downward trend, and now we're moving back up, and we're above the 9 and the 20, and the test of the 20. We should be looking for this cross of the 9 over the 20. Right now, the 9 is still below because this was a very quick move. So we are seeing a possible trend change from a downward trend to a possible move back to a trend, starting a trend up. On the 4 hour, you can see that we had this downtrend. They broke back above, and then we've been holding the 9, and we're moving up. We do have a FUBAR Mr. Sneaky technical gap. A gap close will take us back down into the 25. I'm thinking back to the microcomposite VPOC for the year, which is at the 2750. And then just going to the 30-minute, we get this big move up, and then we've basically just been going sideways all night and balancing out. Inventory is actually net short, but in some decent balance. So let's take a look at the Globex session. So we opened up, and we actually gapped down. We had I've talked about these gaps before. Is we had a Globex gap. A Globex gap is between the ETH session, the 4:30 to the 5 o'clock Eastern time, to the open at 6 o'clock Eastern time. And when you see these types of gaps, you have a very high probability of going up and closing that gap, which we gapped down, got a Mr. Sneaky, and then we rotated right back up and closed that gap. Failed to get continuation above the open, and then we just been sort of slowly grinding back down towards that 2750 area. We got as low as the 2875, almost there. Buyer stepped in, and we're seeing this balance in around that 35. Remember that 35 is the LVN from the yesterday's session, and they're basically fighting above and below it right now. So that's going to be a key level for us. Hold on a second. All right, so taking a look at the macro, what does this mean in the macro sense? In the structure, it doesn't really mean a heck of a lot other than we're continuing to now one time frame up. We violated the weekly one time framing down. We came right back up into this area we tried to hold before at 2738.75, and failed to get above the 51, and we're right smack dab in this distribution that we continue to fight above and below. Key line in the sand above 51, key line in the sand below 2707, and key levels is whether or not we hold this microcomposite LVN area between the 33 and the 2750. So in terms of our levels, our key line in the sand above is going to be that 51. Oh, sorry, it should be moved to 51. Our overnight high is up at 42.25. Just above our close. Our 20-period daily ATR is running at 49.44, so off of 27.42.25. Our downside daily ATR target is 26.92.75. This gets moved up to 07. And this is no longer needed. Move this up to 26.92. Let's see, 92.75. Also, that is right at the, this is looking really congested right here, but we don't need the openings. This is from yesterday. Let me get rid of these off the chart. We've got the Powell scene of the crime. This is where this whole move started from on the 12 o'clock speech that he was giving. This is not our over-under line. Sorry, I was a little late getting to my desk this morning. And our overnight low is 27.28. $75. So off of the overnight low, 27.28.75 plus the daily ATR at 49.44. Our upside daily ATR is 27.78.25. All right, so what am I looking for? I'm looking for a balancing day coming into the Fed. I think that we'll see some responsive selling into the open, down towards the overnight low and back down here between the 27.50 and 27.20 area, and I'm expecting to chop in this area coming into the news, and then finding buyers and rotating us up and getting the break through the 45, but struggling to get above the 51 and likely to come back down and close somewhere in the upper distribution from yesterday's trend day. Value area means nothing. There's no value because we had a trend day. My hypo 2 is an open auction. In range, a move up, a push to try to take out the high from yesterday, a false breakout, and somewhere between 45 and 51, sellers stepping in, rotating us down through to the 27 to 20 area, chopping in this area, and then pushing down through into these low volume nodes and coming back in and chopping in this area as we fight the month open and the centennial number at 2700. That is hypo 2. Hypo 3 is a continuation day. Open test drive, come down, test the 2750, buyer step in early, rotate us up through the 45, come up here and chop between the 45 and the 51, and then get the continuation. And the target on hypo 3 is up here at the 2762 50 area with a possible probe up into this balance area up here where we tried to hold value before, and up near the 2780 to 2786 area. That is my hypo 3. Hypo 4 is a breakdown day, open auction, open test drive, failure to close the gap, or close the gap, but failure to break out, seller step in early, rotate us down through to the 2722, get chopped up in here, and then fail and come down through and come back to the scene of the crime and the Powell statement down at the 2692 area, and then basically just fighting the 2700 and going sideways. So those are my main hypotheses. I'm not going to bother with gold today. And again, I'm going to be quiet on the mic most of the day today, but again, I will have the charts open and I'll make up as I see things that need to be pointed out. As always, trade well, trade safe, and we'll catch you on the flip side.